Hey guys, Sam back with you here. What are we, mid-morning on Thursday, January 11th. Had another member interested in GXS to Bitcoin. So I've got it here on Binance. Now let's just go over and just take a peek at it. So GXShares here. So 46 on the scale. So they're a comer. It's relatively new coin. So you can do a little research here. When's our genesis date? Yeah, 7 months. It's only been around for 7 months. So doing pretty well. They've got a market cap of 615 million, but the score, they're climbing. So this looks good. This is a good sign here. So, again, I'll let you do, if you want to do some fundamental research, by all means, knock yourself out. Here, let's take a look at where it's trading. So we can see 58% of it is on Binance, and it's almost all in Bitcoin. So let's go have a look at the chart, see if there's anything there for us. If we bring it up here, so you can see, again, relatively new coin. This insanity is apparently when it hits Binance, or it's the ICO. So I've got a count on this now. It's trading fairly technically, so we're working from the absolute low here. So I'm going to get that off the screen so we can get a better look at it, so we don't distort the chart. Okay, so there's some few bits that are tricky in here. So we can see fairly clearly we get a nice 5-wave sequence into our wave one. It's perfectly technical. It's all valid. I would like to see a little more in that fifth, but we don't get it. And then we start the retracement. So we're working from this as our low. So, again, as I would always do, you complete a 5-wave structure. We're looking for the next 50%. So from that low, if I go up to my wave one high, well, we get a little front run here. Not a lot of help here from the oscillator, although here's a good example of the divergence that we talk about in identifying an Elliott count. So if I open this up here so you can see it a little bit better. So here's how we can get a handle on that. So you can see here's the peak of the oscillator, right? So whether you're using this is the Elliott wave indicator, whether you're using the awesome indicator, or this just the Elliott oscillator, which is a 534 moving average, the difference being displayed as a histogram, it's useful for helping you identify 3, 4, and 5. So here's the peak of it. So we can see, well, okay, that would make sense as our third. So thus the labeling here. Then we get the retrace for the 4, and then we get this, pretty dramatic divergence here. So we got a new high here in price, but we don't look at the divergence here on the oscillator. So that's what gives you some sense of that you're likely topping here. When you see that start to fall off like that, the market's losing strength. So fairly typical kind of a 5-wave structure that you'd see, a little confirmation from the oscillator. Down we go for the 2. Now the 2 is a little shallow. We get a front run here at the 50. Why I couldn't tell you, but anxious buyers there. So it's were I trading this, likely I'd have been left, holding my order entry here. I would not have gotten a fill because I would have been looking for it a little bit lower. I see this again. I'm doing this with hindsight, but I can just tell you, knowing how I would approach the market, I'd have been a few ticks ahead of that as structural support, and I would not have been filled. But I've got a member who is filled, so let's take a look at it and see where we can go with this. Now here's where it gets a little tricky. So if I pull this off, you can see from that 50, they got right to their first target. They've already hit their second, so that those algo targets are getting hit. So likely algos, they're active in here. Now here, if you make the assumption that that's 1, 2, well, it's tempting to want to go 3, 4, 5. That would make sense. So you look here and you go, oh, well, there's the big oscillator. Well, yes, I do get my third here, but this doesn't play as a 3, 4, 5. I'm going to show you why. So this is where the Elliott rule set can be advantageous to us, so that we're not making the wrong assumptions about where we're looking for the market to find its next support or a target. So that's the point of doing all of this, is to go through and qualify these pivots so we know whether or not we're looking for the next 38.2 or we're looking for the next 618. It makes a big difference, particularly depending on the price of the coin as to where you're looking for entry. So that's virtually every video that I post is an example of applying this and trying to qualify pivots to increase the probability of our entry location and reduce the risk. So that's the point of all of this. So if we look here and we go, okay, if that's my 2, well, I'm expecting a 5-wave structure. But I know that my my third, well, so if this is my 2, so if I back up a little bit, so let me put it in context. So if that's my 1, 2, I'm going to target the 1, 6, 1, 8 from the length of the 1 projected from the 2. Okay, so I've got some pretty good targets up here for my potential third. So here would be the high probability zone right here. Here's my statistically significant and most likely destination for my third relative to this 1, 2. Now, it can go beyond that, certainly. Nothing says it can't. And there's another, this would be an extreme for a third, would be the 2, 6, 1, 8 relative to the length of this 1 projected from the 2. So my expectation is that if somewhere in here I'm going to get my third, but it's not going to go straight. There's going to be subdivision. So if knowing that those are marked off, now my anticipations, let me pull that off since I've got that marked. So now I'm looking for some sort of a subdivision here to get me up to that target, or even higher for the 2, 6, 1, 8. So if I open this up here, now let's look and see where this makes sense and where we can use the Elliott rule set to help us qualify what we're seeing. Well, if this pop off of here, likely our 1 wave, and I can just look at that and say, so I'm sure that went deep. So we got right to the 786. There's the 233 for a little support. So, you know, it's deep, but that's between the 50 and the 786. That's where you'd look for a 2. So if you were not a buyer here and you came in potentially a buyer here, that would make sense. If that's my 1, 2, well, I'm looking for my third off of that. Well, that happens to go right to the negative 100. That's an extreme, but that's not again the higher probability fib relationship I'm looking for is the length of that 1 projected from the 2. I'm looking for the 1, 6, 1, 8, and look right where we go. So we go right, just as this is the 1, 6, 1, 8 off of this 1, 2, now I'm measuring the 1, 2, looking for this third. So that helps me identify my third. I go, not only do I hit it to the tick, then I get a little kicker up to put me right in the box. Right in the box for the highest statistically significant location for a third wave. And where do we go? Boom. So again, that's the point of going it through and qualifying these so I can go, okay, well, you don't know when you're sitting there, but it's deductive reasoning. You can look at that and say, okay, well, highest probability is that's my third. I get a little retracement. Would that make sense in the context of this count? Well, let's pull this off, and then now let's measure it, knowing that I'm looking for a relationship between my 2, the length of my third. So I'm going to pull from my 2, looking for a high probability zone for my fourth. So if I dial that in, get up to my third, where do we go? What's the highest probability zone for the fourth between the 38 and the 50? I get the 38 to the tick. Right? So again, I'm just qualifying this, so that tells me, okay, likely this is my fourth given that relationship I just saw. Here I go up and I complete a 5. Now again, I would like to have seen that 5 go a little higher, but it doesn't. And look at the rip down we get. So what can I deduce from that? Well, I was looking for this to be 1, 2, 3, but that's not what I get. What I get is another 1, 2. Which is not necessarily bad news if you're bullish, because what does that mean? That means that I've got a 1, 2, 1, 2, which implies much higher prices, potentially far beyond the 1, 6, 1, 8. Now that 2, 6, 1, 8 starts to make more sense. Now, why is this a 1, 2? Because of the depth of this retracement here. So I can look at that, and again, just deductive reasoning, I can go, okay, that doesn't look like a 1, 2, 3. This wouldn't play as my 4 because of the depth of the overlap of the 1. Do you see that? So you see, it would be tempting to think that you had this. So you might think 3, 4. Here's what the inexperienced Elliott trader who's just learning. Right? Let me phrase it that way. If you're just learning, this would be your first mistake. So the typical mistake is not to qualify the counts. So you might say, oh, well, that makes sense. Well, there's 3, there's 4. Up I go for the 5. Okay. Well, so I've got my 1, 2, and there's my 3. Okay. Right. That's the inexperienced or could be just lazy Elliott trader there, because you're not, well, one, you're not qualifying the pivots, and you're just going with what's easy. Now, you can look through some videos of mine, and I will tell you that when Elliott is most advantageous is when, you know, it's just staring you right in the face and you can't miss it. But if you're going to go in and start to put money at risk, well, let's take the time to qualify the wave count. Now, why doesn't that work? Because this would be my third. You see, so this, and I would have a diagonal in my third. Can't have a diagonal in my third. So I got to look at that and go, okay, if that can't be my third, what's an alternative? Well, that's where, again, going back through and qualifying the pivots will help you. So what does that mean? That means that what I've got now is a 1, and then this is my 2. Look at the depth of the 2. So if that's my 2, well then, I got much higher prices. So this is good news, not bad news. This is good news if you're bullish. If you're a buyer here or a buyer here, you look at it and go, damn, I gave back so much money. But what does that imply for longer term prices? Well, if this is a 1-2, let's check it. So would that make sense? Would it make sense relative to the fib relationships that I'd be anticipating? Well, here's my 2. Yeah, we get some wicks through the golden pocket, but essentially that's the support. They're just wicks. And we know that a 2 can go as deep as the 786. It can go deeper as long as it doesn't violate the wave 2, this wave too low. But this is the probability zone. So despite a few wicks, this plays as a 1-2. Now what's that? Right? Is that my 3? Wouldn't make sense, would it? So likely what I've got here is yet another 1-2. So I'm trying to, so if I put this here, let me put the wave on so it makes sense. So I'm trying to find that. I'm trying to get 1, 2, 3. Well, if this is going to be my 3 up here, it's, you know, again, as I often say, it's crypto, so anything's possible, but it's not likely to just go straight, right? So as you can see, we're getting some pretty significant chop. So how do we qualify that? What do we do with that? Well, wait a minute. Okay, if this is my 1-2, let me take the wave off here because I think you get the idea. So let's take that off and go, okay, well, so look here. So algo target, bang, that they've already pocket, and then look at the reaction once they get the negative 23. And we sell off. Okay, so the 2 makes sense. 2 makes sense. So I've got 1-2, 1-2. Well, what's that? It can't be my 3 given that. So again, it's deductive reasoning. Okay, well then this must be the 1-2 of the third. So let's try and label that. Well, would that make sense? Is this 1-2? Yeah, that would make sense. If I'm trying to get 3, 4, 5 up here, let me change the color and the degree so it makes sense. So if I pull that down, okay, so I'm trying to get up here and complete this third. I'm looking for that third. 4th and 5th. All of this is good news if you're a bull. So I've got 1-2, 1-2, 1-2. All of that means much, much higher prices. That's what's being implied there. So if you're a bull, that's good news, not bad. So here's my 1-2. Up I go for my 1. I'm down for my 2. Let's check that. Would that make sense? So again, deductive reasoning. If I go up for the 1, look here, almost identical to what happened here. Right, and you'll often see that if it's gonna, you will see this tendency to repeat. If it's going to get through here, it will likely do the same thing here. That's something to look for. It's not absolute; it's a tendency. So that would play as a 1-2. Well, I'm expecting my third. Now, eventually, I'm going to get a third. Now, take a look here. What we just did, a little front run on the algo target. Likely, look at the reaction. So likely, that's some profit taking there. Okay, so can that play as my third? Well, if that's my third, first thing I got to check is say eventually I'm going to get a third, so I know it's got to be 100% of the length of the 1. Not quite there yet. So that would imply that if this is going to play as my third, that I'm not done yet. I got to at least get up here. So you know, here are more likely targets, right? So I'm doing the exact same thing that I did going through the prior counts. I'm trying to qualify. Well, if this is my 1-2, here's my statistically significant zone. Now, look how it relates relative to this 1-2. We're way beyond that. We're way beyond. So now the higher probability is the 2-6-1-8. So now I draw this and go, man, this is good news if I'm a bull. All these 1-2s are very bullish for me. So good. Okay, so there's my potential third of my third of my third. I know it's confusing when you're first doing this, but that's what we're looking at. So you can see likely we've got a little 1-2, 1-2 already underway here. So this market is really teeing up to just fly. You know, again, it's hypothetical, potentially could fly. It's not. I'm not saying it's guaranteed to be going there. I'm saying it certainly looks like it could. It would certainly make sense to follow that. We'd have a roadmap here that would make sense. So if we start to, let me scrunch this back and go, okay, does any of this play, is it consistent? What's important to me? This is kind of interesting. Here's my wave 1. Look how with this little structural support, these continue. Prior resistance, support. Here's my 2. Here's my potential 3 is way, way, way up there. Okay, can I get any market geometry to play in here? Well, let's just take a look. See if I pull from my low here, and I'm just checking these, right? We're trying to solve the puzzle. Well, that's kind of interesting. Look at that. So we get a little shy of it right here. So I know here's Andrew's trading principle number 1. If I've got 3 good pivots here, the probability of getting to the median line 80%. I also know that a failure to make the median line implies weakness. Right? Do you see it? So let me pull this off so you see that. So since we don't make it here, it implies weakness, and look at the reaction that we get. But now we're trying again. So when do we get there? Is it here? Is it here? Do I draw again? So since I've got that labeled, so let me put a box there so you can see. So we know that potentially that's a median hit on the larger pull off the 1-2, right? And we got 80% odds there. But I want to check again. So I want to look at this and go, well, maybe I need to check here and see if I can get some confluence. So does that work? You know, well, so it got there quickly up to the 1.5. Here's the lower parallel for the 2. Just as we saw it here. So here's the lower parallel to and through to the upper parallel. Interesting. Maybe I have to draw that again. So right now, I mean, this is just playing ball for us. So again, we have a roadmap here. This is a potential unfair advantage. Just someone else who doesn't know how to do this. Okay, well, what do we got there? Well, that's kind of interesting. Look at that. So we're a couple of ticks shy. My bet would be before this thing quits rallying, we're going to tap that. So that's what you call technical confluence, right? So we've got the algo target. Potentially, we know that there's that this third has got to come into some play because we're not quite there. Remember this? Remember, we got to qualify this as a third. We want it to go at least as long as the wave 1. Well, look at that. That's what you call technical confluence right there. So do we get there? Odds are that we do. Remember, we've got if we've got 3 good pivots, and so far no reason to think that we don't. We have an 80% probability of getting to the median line. That's why I can't believe someone trades without median lines. Where else in the market do you get 80% odds? Nowhere. Nowhere. I don't put a chart up anywhere without trying to find the market geometry and the median lines, because where else can I find 80% odds? I don't get it. It shocks me how few people use median lines. Absolutely shocks me. Yet it's in every technical package that's ever been created. It's always there. People just go, I don't know how to use it. I don't know what it's all about. Lazy. Not if you work with me. You won't have a chart that doesn't have a median line on it. Okay, so we've got a target there, but we've also, so here's a first target. So potentially we might see something like this. Not, maybe we see something like this. Then maybe we go again. Up, that's the other element here that's advantageous. But remember, we've got multiple median lines. I'm just going from one set of pivots to the next set of pivots, consistently looking for where does it fit. Here, remember, we got this way up here. Right? So maybe we have to pull back. So what I would do is I would keep multiple charts for this. So I'd have the median lines from the first pull, the second pull, and the third pull. So I don't miss one. So because I was too lazy to go, I don't want to, I'm not going to keep that. I'm just going to go with the current one. No, it's the one that you don't check will be the one that'll hit. That's just how the market is. So I would keep all of those. So spread your screen so you can get 3 or 4 versions of this. Keep an alternate count. So in case this roadmap doesn't unfold, and I sure as hell would be checking all of those median lines. Now, why not put it all on one chart? Because it'll just be a cluster. You won't be able to see it. It'd just be hard to see what's happening. So this would surprise me. This would surprise me. Now, if this doesn't make the median line there, what does that say? Potential we've got a failure. We'd have a failure because a failure to make the median line implies a move equal to or greater than 100% of the swing that went up and missed it. So if that's going to fail there and not get to 100%, we're going to come back to equal to or greater than 100% of that move, well, then this count is invalidated. The whole thing is off, and we got to reconsider an alternative. What else could it be? Well, then we're back to square one, rethinking the entire thing. Right now, there's no reason to anticipate that it wouldn't continue in this path until we get invalidation. Now, it might not make it easy for you. This is unusual to just rip straight up like that, and we may have a little pullback here. We pause. Is it going to get it here? Is it going to get it here? Is it going to get it here? That's the other benefit of median lines. They give you a time element that you don't get from just straight algo pulls, from straight fib pulls, or from wave relationships. You get a sense of, with experience, you get a sense of when it looks right. That comes from looking at thousands and thousands of wave counts, and there's a symmetrical structure that you're looking for that's somewhat idealized. But look, this is not idealized. 1, 2, how tight that 3, 4 is, but that's what the numbers dictate. So by validating those pivots, I know that this all plays, right? So I don't break any Elliott rules here, and now each of these pivots has been technical. So here's an important one. So what do? So you alarm this, so that I don't have to stare at this thing all day. So I'm going to alarm that, so I know, do we get there? If I alarm that, good. Now I'm looking for the next retracement. Is my third going to top here, or is this going to be the third of the third, and I'm going up higher? So I might see, so if I open this up, maybe I've got something like this that's unfolding here. Remember, it's waves within waves, so I'm looking for, maybe I've got 1, 2, 3, 4, and I go up in 5. Let me put that in white so you can see it. So maybe I get something like that. So maybe the failure to get there is just teeing up the fourth. So if this is my 1, 2, then I would be pulling for my 4, anticipating that I'm going to get there. I like this even better. Right. Fine with me if it gets there that way. I just know I've got a market that's technical, that's giving me opportunities for all sorts of good entries with some pretty juicy targets up above. Right? We started with this 1, 2, and everything just implies much higher prices, but all still comes back to that initial 1, 2. Right, you see that? Okay, guys. I went long on this one. Okay, I'm going to wrap there.